Hello, everybody, and welcome to our 2021 Investor Outlook presentation. I am Don Houston with United States Investors International at LPL Financial. Today's agenda is very straightforward. First, we'll share with you a review of our equity markets. Then we'll discuss the 2021 outlook for investors. Before we begin, it's always important to review that there are 5 key areas of financial planning: preservation planning, retirement planning, tax planning, estate planning, and investment planning. As a comprehensive financial services firm, we always try to consider the impact of any recommendations we make on not just one, but all of those areas for our clients. Today's presentation will be primarily focused upon investment planning and the equity markets. As a quick review, the United States stock market ended 2020 at all-time highs. After a waterfall drop and the quickest downward decline of the century in March of 2020, fueled by the largest federal government stimulus ever, historic support from Federal Reserve, and optimism about how quickly the economy is likely to bounce back, the S&P 500 stock index, the most widely watched barometer in the world of the equity markets, finished 2020 up more than 16%. The fact that a pandemic-induced economy shutdown of epic proportion was absorbed by investors and the year ended with stocks at a higher level is historic. In March of 2020, investors saw stocks plummeting 34%, starting a bear market. That bear market turned out to be the shortest downturn in U.S. history. Since the U.S. stock market bottomed on March 23rd, the S&P 500 has risen 68%, shattering all-time records along the way. Clearly, investors who stayed the course were rewarded. While equities climbed higher from their March lows, not all stocks recovered to positive territory. In fact, as you start analyzing the year-end market highs, gains in Apple, Amazon, and Microsoft alone accounted for half of the S&P 500's 16% total return. If you remove the top 24 performing companies dominated by tech and digital services, the S&P 500 return for the other 476 companies would actually be negative in 2020. Interest rates were not much help for investors in 2020 either, and they started 2021 at or near historic lows. Federal Reserve Chairperson Jerome Powell announced again at their December meeting that interest rates will stay close to zero for the foreseeable future. Congress also acted aggressively, approving a $3.5 trillion emergency relief and stimulus measure in 2020. This was the largest action in the face of a recession in U.S. history and provided some of the biggest aid packages in the world. Entering 2021, as this chart shares, interest rates are 0.09% for the average bank money market and 0.16% for the average 12-month certificate of deposit. Both those rates, clearly less than 1%, can be very unattractive to income-seeking investors. Perhaps nothing has been more puzzling than the disconnect between the equity markets and the economy. The market's rebound reflects Wall Street's optimism about the prospects of 2021, but it also accentuates the disconnect between the stock market's wild success and struggling American households. Wall Street is at all-time highs, but many places are still experiencing shutdowns, high unemployment, overrun hospitals, and economic hardships. Sadly, many local businesses like restaurants, gyms, and small shops may never recover nor reopen. Everywhere you turn, you're reminded that there's a deadly pandemic. It's responsible to date for more than 340,000 American deaths. It's also left millions jobless and hungry. In fact, as these statistics share, as of year end, the COVID-19 daily cases, daily deaths, and hospitalizations were all peaking to their highest levels. There's a great optimism in the equity markets about how quickly the economy is likely to bounce back in 2021 as coronavirus vaccines become widely distributed. Investors are focused on the future, and the stock market is priced as a forward-looking indicator. Also, stocks remain appealing for many investors because interest rates are so low, making equities more attractive than any other assets, such as bonds. Our goal is to make sure that your investing plan is centered on your personal goals and timelines. For 2021, caution is still the principal notion for investors. Let's turn our 2021 Let's turn to our 2021 outlook. We begin with a new administration in Washington, D.C. Our job as financial professionals include reporting and analyzing political activity and relaying how the new administration could impact the investment world. While all changes need to be monitored, some specific things that need to be watched include future stimulus, suggested tax increases, vaccine distribution success, and trade agreements with key international trading nations like China, Mexico, Canada, Europe, Greater Europe, and the rest of the world. Many investors are wondering how a Democratic first 2 years of the presidency, House of Representatives, and an evenly split Senate, which allows the vice president to preside over, ties up and affects equity markets. While history is nice to look at, it's never a tell-all sign of the future. However, during the 10 previous periods, which we can see here in this chart, circumstances that date back to 1949, 8 of those years were positive for the 2-year period. For 2021, we'll be carefully monitoring public policy and the new administration. So what are analysts forecasting for 2021? The stock markets enter 2021 with favorable outlooks. Barron's recently surveyed 10 market strategists and chief investment officers at large banks and money managing firms on the outlook for 2021, averaging their year-end S&P 500 forecasts, which range anywhere from 3,800 to 4,400. The group expects the index to rise approximately 9% in 2021 to about 4,040. The group also expects dividend yield of around 2%, and their forecasts show that U.S. stocks could return a total of 10 to 11% throughout 2021. This panel also predicts the U.S. economy will grow by 5% in 2021, its fastest rate since 1984. That would be healthy following a year in which our gross domestic product plummeted by 31% plus in the second quarter as the pandemic gripped the country and soared by more than 33% in the third quarter. While this forecast is optimistic, we'd like to remind you that we consider your feelings about risk and the markets when we review your unique financial situation and make recommendations. There is great optimism about how quickly the economy is likely to bounce back next year as COVID-19 vaccines become widely distributed. However, for 2021, there are still many uncertainties. Major risks include potential damage that can be done if the massive vaccination campaign in the United States does not run as smoothly or as quickly as investors or the markets are expecting. Also, there's still a major risk to the economic outlook if the recovery is delayed and the corporate revenues and profits fall short of expectations. Should 2021 be an interesting year, and our goal is to be communicative with clients on how things are proceeding. So it's certainly looking to be interesting as we move and maneuver into 2021. As a quick recap, remember 2020 was a year that rewarded discipline. Interest rates are at or near all-time lows. There's a disconnect between the economy and the equity markets, Main Street to Wall Street. A new administration brings new challenges, and the effect of COVID-19 is still critical to investors. Also, you should be cautious and vigilant, and we're going to pay attention to those things that are critical as we move forward. You should focus on your own personal goals and objectives, and as always, call us with any concerns. A legendary portfolio manager, Peter Lynch, reminds us that we get recessions, and you've got stock market declines, and if you don't understand what's going to happen, then you're not ready, and you won't do well in those markets. So what can you expect from us? One of our main focuses is to review changes that may affect you on an ongoing basis. You can expect regular communication, more frequent discussions, and you can expect that we are continuously reviewing economic, tax, estate, and investment issues for our clients. In fact, we will be offering other workshops that focus on tax advantages and planning ideas. We appreciate our clients very much. As a client benefit, you can add names to our distribution list for viewing this workshop, and we hope you will take advantage of this and add 2 names to our list. We plan in 2021 to continue to help others. Some of our best clients were referred to us by existing clients. Please feel comfortable letting us know the names of anyone you feel can benefit from this information. Again, our goal is to keep you informed, and we think that watching our videos may help you navigate these markets as we move into 2021. Best wishes for a great and healthy 2021. Please call us if you have any questions. Until next time, thank you for tuning in.